Why traders make loss in leverage trading or futures and options trading? In this video, we are going to see what is leverage, how it can work for you as well as against you, why people get attracted to this very lucrative form of futures and options trading, and at the end I am going to share what are my conclusive thoughts about this particular style of trading of futures and options. So let's get started. Let's first discuss about what is leverage. Leverage is a concept wherein you try to get the maximum outcome with the very minimum usage of the force or the resources by using the power of fulcrum and a lever. Not going into the technical details, practical terms in trading, let's say you have 1 lakh rupees of trading capital, 1 lakh rupees of cash in your account. Now, how much is the buying power of that 1 lakh rupees? That is nothing but the leverage. Let's say you have a 2x leverage from your broker. What it means is you can buy 2 lakh rupees of stocks by using the 1 lakh rupee of your cash. So you are getting double the leverage. Let's say you trade in futures and options, and there actually futures and options, these are derivatives where the price of this instrument is derived from the underlying asset. Futures and options, you need to buy the shares in quantities, the bulk lot. You cannot buy 1 or 2 shares. There is a fixed standard lot decided by the exchanges, and you need to buy that lot as a whole. That's futures and options trading. Now let's say I have to buy a share which is priced at 1000 rupees, and I need to buy, let's say, 100 shares. Now, if at all I have to go in cash market, I can buy 100 shares at 1000 rupees. So the total I need to pay to the stockbroker in cash market or equity market will be around 1 lakh rupees. Now the same we will compare with futures and options. Whenever I am buying a lot of these shares, let's say there is a lot is of 100 shares, one lot of this particular company, and the total value of the contract that I'll be making is 100 into, that means the lot size multiplied by the price of the shares. That will be the total value of that contract. So that will be around 1 lakh rupees. But I don't have to pay this 1 lakh rupees upfront to the stockbroker. I just need to pay, most of the cases it's 20% approximately. It varies on day-to-day basis, but roughly it is 20%. So I can take a position in this particular stock where I'll be is as equivalent as holding that one lot of shares, 100 shares, by not paying the full value of 1 lakh but just paying 20%. So let's just 20,000 rupees. Now at first go it appears very lucrative that okay, if at all if the share moves 1% in my favor, I'm going to get not 1% profit, but actually it is going to be 5 times profit, that is 5% profit. What people tend to forget is it can work against you as well. And when the stock moves against you for 1%, you also lose by 5%. So your loss is also amplified. That's why leverage is called as double-edged sword. It can work for you as well as it can work against you as well. What most of the people fail to understand in this process, they think that winning and losing using the leverage are same, but they are not in practical. Let's say you win 10%, your capital will increase by 10%. You win 20%, your capital will increase by 20%. If you lose by 10%, your capital will get lost by approximately 10%. Now, if you lose your capital in the trading by 20%, you need to make back up to getting to that previous break-even level. It will be more than 20%. If you lose 50% of your capital, now just pay close attention to this. If you lose 50% of your capital, how much percentage in returns do you need to make to get back to your break-even level? Is it 50%? Give it a thought. It requires extreme amount of discipline in trading futures and options. So does this mean that futures and options are bad or you should not use them at all? As I said, it's a double-edged sword. It can work in your favor as well. All you need to do is you need to know how to use it to your advantage and not against you. So I personally feel that leveraged form of trading is not for the beginners. Futures and options trading in the hands of inexperienced people is responsible for most of the trading casualties and one of the most common cause of the big losses in people's trading accounts. So first get the experience of handling the leverage and then only indulge in futures and options. If you can use leverage to your advantage, an enormous amount of profits can be made by trading futures and options the right way. So that's all for today. I hope you enjoyed this video. If you liked what I shared, don't forget to hit the like button, subscribe to the channel and share this information with your friends whom you think this information can be useful. I thank you for your time and I wish you a very peaceful, safe and profitable trading. This is Deepak Bangar signing off.